Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are looking at Jakks Pacific, ticker JAKK. This is another requested stock, one that I don't know much about. From what I can tell, they are a toy company, but I always love to look into stuff. So let's dig into this one and see what we have here. We see revenue on the top line. They have made some progress, moving from 598 to 796 over the past 4 years. They are expected to drop back down to the low sevens this year, and then back up to the mid sevens this next year. And we'll see if they are able to do that. We see that comes out to a growth just shy of 10%, which is about where we like to be. Over these last 2 years specifically, they had seen greater growth, around 24% year over year. The cost of goods have been climbing faster than the growth of that revenue. But they seem to have been able to cut back their expenses as a portion of their revenue, because that's dropped from over 100% to 92.3%. So they have consistently dropped that year over year, which is something that we like to see. There are a lot of things that are trending in the right direction here. If we look in 2019 numbers, they were pretty low on revenue. They were losing money, earnings per share. They continued with losing money through 2020 and 2021. Last year, they did turn a profit. This year, they're expected to turn a smaller one, and then hopefully continue the growth trend here into the future. So this last year, another stock where they had an incredible year this last year. Everything here looks good, 53% earnings yield. They don't pay a dividend. They were trading at a PE of 1.87 because they had a earnings of $9.33. And they finished out the year $17.50. And that gave us a fair value of almost $45 on the stock, mostly driven through their cash flows, which they had an incredible year for cash flows. So that is something to be aware of. I'm using for the future projections their average cash flow yield across the last few years. So they'll likely come in at a higher level, but it has dropped down and is continuing to drop down here into the future. Not a lot of the value is brought from earnings. Dividend is non-existent, but we use 1 cent to help with the math. So the balance sheet is where the majority of the value also comes from. It's really only the cash flow and the balance sheet that has value. So we can take a look at those and see the share count, because that's very important for cash flows and balance sheet. We see that it's growing at almost 55% year over year, moving from 2.5 to 9.6, and it will be in the double digits this year if it continues on that trend. They actually have picked it up over the last few years. So, as we all know, that is a huge red flag where they're diluting you out of your position. And I personally don't touch stocks where they're growing their share count, especially if they're consistently growing it like this, almost doubling every single year. Then we have the assets. The assets are growing at a decent rate, 3%. It would be nice to see it grow faster. It has picked up in these last few years to over 10%. The tangible assets have been shrinking, though. Well, have been growing the best, moving from negative 54.5 to almost 114, which is a very good trend. The liabilities have been shrinking. They've moved from 361 all the way down to 246. So they're likely taking that money from issuing new shares, taking that and paying off some of their debts, which in the long run may not be bad for the company. So we come out with a debt to equity ratio of 1.68 at the end of this last year. They have really been shaping that up. It was almost 123, then 27, then 5, and then less than 2. So if they can continue on this trend, things will be looking very good. They have $8.86 cash per share. So they have enough cash for half a share worth of value. Back in 2020, they had significantly more, especially since they had fewer shares. They had way more per share. Dividend non-existent. They have almost every single year grown in share price, which is nice to see. They've been growing at about 20% year over year, 23%. So outperforming the market. The return on equity looks strong this last year. Outside of that, not too great. The PE, they seem to trade at a low PE. I mean, they've been negative 3 of the last 4 years. So 2022 is all that we really have to go off here. We do see consistency. They are consistently progressing in most factors. We do see that they have a nice they had a nice ROE this last year. They had a good earnings yield. My one concern would be the growth of the share count. I'd like to see them stop doing that. It's a very small share count that they have to begin with, but I'd really like to see them stop doing that, and then to show that they're able to actually turn a profit, because their first net profit was this last year. Their first earnings were this last year. And then I would be more interested in the stock. Because what I'm seeing here, if we project things out, fair value keeps dropping year over year. And that's coming from mostly the issuance of new shares, bringing down that balance sheet and cash flows. So we're dropping from, as of the end of last year, we'd be a fair value around 45, and we'd want to buy in the high 30s. But this year, 15.5 would be the buy zone, and next year 12 would be the buy zone. So in the low teens, teens would be a decent area, I'd think. So it's about twice the value that I'd like to see it to consider buying it. And I definitely would think that it would be overvalued, sellable in the high teens, low 20s. If they can prove that the trend has changed, and they can be profitable and stop issuing shares, then it would definitely be a stock to look at. I'm not saying that buying it now would be a bad idea. It doesn't hit my personal criteria, but it definitely has good potential for growth. I definitely see it. They have progressed through hardship, clearly. And this last year was a really good year for them. Hopefully this year is too, and they continue on this trend going forward. But that is what I am seeing with this stock. So I'm going to have to give it a hold. Hopefully more analysts come to this stock, because these numbers, we'll see if they're true, but there were not a whole lot of analysts covering it. It's not something that I'm too familiar with, so I'm not surprised. It's definitely a smaller company, clearly. Let's look at the share count, but we'll see how it grows into the future. I definitely feel like there's potential. So thank you guys for watching. Please comment if there's any other stocks that you want me to take a look at. Subscribe if you want to see more like this, and I'll catch you next time.